In this week's episode of the Stockscores Market Minutes, I'm going to show you a very simple way to buy exchange traded funds for your retirement portfolio. Trading in and out of these funds can be quite lucrative if you understand a simple concept, and I'll show you what that is. Plus, I'll give you my analysis of the overall markets. We'll look at stocks, commodities, currencies, Bitcoin, and interest rates. And finally, we'll look at the day trade of the week. That's all coming up. So a very simple strategy that you can employ with exchange traded funds is to buy them when they break a downward trend line from a rising bottom. I'm going to show you this in just a moment, but buy it when you break a downward trend line from a rising bottom. Now, if you do this, it's not going to work all of the time. It's really a numbers game, a probability game. It tends to work more than it fails, and when it works, the profit size is bigger than the typical loss. Now, it's important to plan to lose, and so if the ETF breaks down, falls through the floor established at the last support zone, then you need to be concerned. And I encourage you to take a look at my video from last week where I talked about when it is time to take a loss. That's an important video that explains where stop losses should be put. And it's the same with this particular strategy. So let's look at a couple of examples that emphasize this, and we can do this on many different time frames. So what I have on screen is a chart of the XLK, which is an ETF for the technology sector in the US. And I'm going to draw a trend line, and just notice how I start at the highs and I let it fall. And you'll notice that here it breaks. However, this is not a rising bottom, it's a falling bottom. So that one doesn't count. So then I can take my line and let it fall across those highs. And there I see that it broke the downward trend line in January after building a rising bottom. So that's the kind of thing that we're looking for. Now we can do it on a shorter term time frame as well. That was a weekly chart, but we can do it on the daily chart sometimes as well. This is a daily chart of the gold ETF. And again, if I draw a trend line like this, I see it broken. Oh, no rising bottom. Okay, so draw it across the next line. And there you see broke, but no rising bottom. So I go to the next one. And there I see broke, but that's from a new low. So that doesn't count, that doesn't count, that doesn't count. Finally, I can take one across this, what we call inflection point, and there's a break right there. This bottom is higher than this one. So that means momentum is shifting from downward momentum to upward momentum, and you're breaking up from a rising bottom. That was at 168. Now it's at almost hit 188 recently. So that's the kind of setup we're looking for on this very simple strategy for exchange traded funds. You can do it on stocks as well, as long as they're quite actively traded and liquid. All right, let's get into this week's market analysis, and we'll start off with the S&P 500 ETF, SPY. Now we have a Fed decision coming up this week, and that'll be critical for the market. In anticipation of that, perhaps, we saw some pretty good strength to end the week last week. We rallied into resistance on this short-term chart. I expect we may get a little bit of a hesitation at that resistance early next week. However, the bottoms are rising, and that means the buyers are in control, and therefore this is an optimistic market. Now looking at the longer-term time frame, the 3-year weekly, it's broken a downward trend line, built rising bottoms, and now it just needs to get through this horizontal resistance. If it can get above 420, 418, 420 on the SPY, the market should begin a spring rally, perhaps going into the summer. So conditions are getting better. We just need that last step, that last break. All right, let's take a look at the Canadian market. T.XIU is the ETF for the TSX 60. And you can see here, we're going to start with the 1 month, 60-minute chart. Always ask, who's in control, buyers or sellers? Well, the bottoms are rising, so the buyers are in control. We had a little bit of a breakdown last week, but the market's managed to come back. The question now is, will it break through that resistance level, or Or are we going to get rejected there and move lower? And I think a lot of that will depend upon what the US Fed does, as it tends to affect markets globally. 3-year weekly chart, very similar to the S&P in that we're building this pattern. It's called an ascending triangle pattern. The issue though is that if the market breaks out from this, the upside's quite limited because it'll get stuck at that resistance. So it's a good chart, but it's not a great chart. All right, let's move along to commodities. We'll go to gold. We looked at gold earlier, but let's look at the short-term view, the 1 month, 60-minute chart. And you can see we've been pretty sideways the last few weeks. We had a good rally a month ago, but now sort of getting stuck there. So it's kind of a neutral looking market. 3-year weekly, also neutral because it's had a great rally into resistance. And when you rally into resistance, you tend to get stuck at resistance. We've got resistance there, and then we've got resistance from these highs. And that's why we've stalled over the last month, is we're just dealing with the fact that we're hitting that ceiling where price will get stuck. Well, how about oil? USO is one of the ETFs that you can look at for oil. Let's go 1 month, 60-minute there. And you can see that we had this little upward trend going for a few weeks. We broke it, and then we broke down from a falling top, and that has led to the market moving lower. So until this little downward trend line can be broken, I want you to be cautious. However, in the grand scheme of the last month, it's really kind of a sideways market with quite a bit of volatility. Now, looking at the 3-year weekly chart, you can see that we had a few different signals. We had the upward trend line broken here, and then we had a downward trend line broken there. And so what direction the market's going to go out of this is a little bit difficult to call. This was a pretty negative breakdown, and then this was a great comeback, and now we're pulling back again. So I think we're going to wind into some low volatility, and then the question is, will we break up? Will we break down? That's what we have to watch for. For the short term, I would say we're neutral on the oil market. All right, how about interest rates? TBT is a good chart as a proxy for interest rates, and you can see that the the tops are falling, and so therefore we have falling interest rates towards support. Are we going to break up or down out of this pattern? More than likely, we will break down, which means interest rates go down, but there's always that possibility that the Fed surprises with their comments and we actually break up. I find the market's pretty good at predicting what the Fed is going to do, and so I would lean toward the Fed not surprising with anything negative come their decision on Wednesday. All right, the last thing we're going to take a look at are the currencies. We'll start with the US dollar, UUP, and you can see there that the trend on the daily is down. The 1 month trend is also down, and the 3-year weekly chart is really threatening this upward trend line. We've built the falling top. We just haven't made the decisive breakdown. And I think, again, what the Fed does next week will have a big effect on this. But this is also pointing towards something positive for stocks, but negative for things like the US dollar and lower interest rates from the Fed. We'll all get that answer on Wednesday. All right, the last chart we'll take a look at is Bitcoin. GBTC is a good ETF as a proxy for that. And you can see that the trend over the last few months is up. We bounced back a little bit last week. Let's take a look at that 3-year picture. It looks pretty good. The 1 month, 60-minute chart is still quite choppy. And so I don't think there's a strong signal that it's going to go higher or lower. More than likely go a little bit sideways in the next little while. But still, the big picture, the longer term picture, seems to still be okay. So my ratings then, let's jump into that. Neutral on both time frames, neutral on the long-term time frame for US and Canadian stocks, but short-term bullish. We're building some optimism. Neutral on both time frames for gold and oil. US dollar long-term neutral, short-term bearish. Bitcoin long-term bullish, short-term neutral. And interest rates long-term bearish and short-term neutral. All right, now it's time for the day trade of the week, and we saw a pretty good pickup in the day trading action around the middle of last week. And there were some real hot stocks that made big moves, and this week we'll take a look at one of those. This was HUDI, traded quite heavy volume and made some good signals. There was more than one on this stock, but let's focus on the late day signal when the stock broke a pullback from a rising bottom, in keeping with that theme that we've talked about. There it is, the break of a pullback, break of a downward trend line from a rising bottom, and that moved quite nicely. In risk reward terms, that's what these lines represent. This stock earned about 5 times risk. So that means if you risked $1,000, the profit was around $5,000. If you risked $100, the profit was around $500. And so for a late day trade, that's a pretty good move, and the liquidity was great, so it was pretty easy to move in and out of those. If you want to learn more about my day trading or investing approaches, go to the Stockscores.com website. There's information there in the trader training section. But most importantly, make sure you're subscribed to this channel because that's free. I do these videos every week, so click on the subscribe button, like the video if you thought it was good, and leave a comment. I always take a look at those as well. Hope you've enjoyed it this week. As always, trade well.